That's right. The most recent economic data has been truly devastating, as we just saw again with the housing starts number. But Greg Epp has been writing in the Wall Street Journal. He says that there are signs that things may have bottomed out, at least for now. And joining us to talk more about this is Greg Epp. He's the chief economics commentator for the Wall Street Journal. Greg, I read with great interest your piece over the weekend talking about some different statistics that certainly aren't all-encompassing, but maybe some points in time that capture where we are. And it does sound like things are picking up. How'd you come across some of these numbers?
Well, you got to remember that right now, this is a very fast-moving series of events. We basically went from a strong economy in February to utter collapse in April, as we saw with the housing starts data. Retail sales, industrial production, employment in April all showed record declines. But since then, some states have started to open up. And so at times like this, you can't rely on the monthly data, which is outdated. You got to look at things like daily and weekly data. And we have a lot of that from private places like Apple Maps mobility data, which show that the worst point was early April and that we've now seen a significant uptick in mobility. And you translate that to things like visits to retailers that are compiled by a company called Unicast, same story, down 50% in April, now maybe down only 30%. You listen to some of the commentary from companies like Uber or Wendy's, they're saying that the worst is behind them and that the year-over-year declines are now diminishing, which tells us that on a sequential basis, things are looking up. Becky, we may look back and conclude that April was the bottom.
You know, Greg, it's great news, and it certainly shows that people are having some returns to confidence. I really like the Apple Maps number because I realized I hadn't used Waze in months, and I used to use it constantly. But it gets you back to that point that down 30% is still a huge drop-off, maybe not down 50%, but we are not talking about a V-shaped recovery in any stretch.
Not yet, but I'm one of those who wants to be a little bit more patient with the data before I write off the possibility that we'll have a decent rebound. Let's keep things in context. Like I said, it was only 3 months ago that we were at record low unemployment. That was just 3 months ago. Recessions typically last, the shortest recession on record before this was 6 months. The longest was 18 months. It may turn out that this one was only 2 or 3 months long. We need to give this one a little bit time to sort of develop some confidence. And as stores reopen and as confidence returns to consumers and business, then you could actually see a self-sustaining recovery. All of that, of course, contingent on the virus not coming back and there not being a significant second wave of infection.
Yeah, I think the big question so many people have is how many of the furloughed employees become permanent layoffs, and how do you kind of go about trying to figure that out?
Well, we know that of about the 20 million people who lost their jobs in April, about 80 or 90% of them said they were on temporary layoff. What that means is two things. First of all, it suggests that a lot of them are going to come back as soon as stores and companies are allowed to reopen. But it also means that about a couple million, at least, possibly as many as 4 or 5 million people have permanently lost their jobs. And that suggests that the unemployment rate is not coming back down to 3.5% anytime soon. Even the optimistic people you talk to don't see it coming much, below 7 or 8% for the rest of the year. Mm-hmm. So, of course, It's kind of, Becky, it's like been down so long, looks like up to me. I guess what I'm trying to say here is that it was awful in April. It'll be a lot better in May, probably a lot better in the summertime. But that's nothing at all like saying that we'll be fully recovered.